Hello and welcome everyone. Thanks for joining us today, and I can see a lot of those who've signed up on the call now. You're joining us for the second or third time. Today we're going to focus in on the cash flow piece. My colleague Ravi is going to be working with me to take a close look at this tool that we've circulated to all of you, and hopefully you've now all got access to. So what Ravi is going to do is going to pick up a live example pointing out each section of the cash flow and how it works, and more importantly, he's going to lay out how he would use the model to test these different what-if strategies and tactics as he walks through and shows you how that impacts the cash flow in a live way. So Ravi, over to you.
Great. So let me just share my screen. As John and Rosie mentioned, we're going to spend about the next 15 minutes talking through the cash flow model template that has already been shared with you. We're going to spend a bit of time talking about each tab, the type of information that's got to go in, and then we're going to talk about various cash flow tactics, cash management tactics we can deploy, and how that's going to affect our cash position over the next 13 weeks. So on the third tab, we're calling it a dashboard. There's two key elements, two key parts. The first is the graph for the cash flow, for the closing bank balance, and the second is a control panel. Now, I'm going to come back to the control panel a bit later in the call, but let's start with the cash balance graph. Now, effectively, what this graph is showing us how our closing bank balance changes over this 13-week period. And it's going to be a key part for us to understand, okay, how are things currently looking? And then based upon the tactics that we're deploying as part of our cash management, what does the cash flow then look like for us to then make some further decisions upon? So as you can see currently, the cash flow goes negative at the first week of April. This particular example of a cash flow forecast goes negative the first week of April, starts to climb back up again towards the middle end of June, and it's negative to the largest extent of 108,000. Now, in this particular example, I'm going to use the example of a windows and doors manufacturer as a way of talking about the cash flow and how it's been populated. The key thing about a cash flow, and John and I often refer to clients to this when we're talking about putting a cash flow forecast together, is get all the information in here first. Every single pound and penny of cost, every single pound and penny of possible revenue, get it all in here first, and then let's do some scenario planning. Right. So let's talk about the cash summary tab. So this effectively is the core table which feeds that chart. There's nothing for you to input here. It's all calculated based upon the information you put in on the following tabs, but it's based on cash in at the top, cash out down the bottom. So we've got confirmed revenue. Confirmed revenue is that revenue which we've got contracts in place for, but not necessarily invoiced for yet. Now, in the case of a windows and doors manufacturer, we might have signed a contract with a property developer to say, yes, we still want you to go ahead with these doors and windows. We might be making them in our factory floor, but we haven't got them out the door yet and haven't invoiced for them. That's what goes in confirmed revenue. Age receivables is the tab where we put in the information related to those invoices we've already issued. Our financing line covers any loan repayments, covers any incoming loans that we'll talk about in the scenario planning at the end. And then in the cash out section, we've got variable costs. Those are those costs related to delivering on confirmed revenue. So by taking the windows and doors manufacturer example, it would be the cost of the timber, the cost of the glass, the cost of the hardware. Our admin costs are our reoccurring fixed overheads, rent, rate, salaries, subscriptions, things like that. Age payables are those invoices we've received from suppliers. We've got a tab for VAT, PAY, and CIS, and also a line for loan repayments. So as you'd notice, there's a column here called switch, where we can switch some of these on and off. That's for some scenario planning, which we'll come back to at the end. Okay, so let's talk about confirmed revenue first. So as you can see here, it's laid out, we've kept the layout pretty simple. Effectively, the way it's been filled out currently is, say we've got customer ABC, we've still got a contract in place for £1,000, and that we think that money is going to come in on Monday, the 20th of April. Now, let's for the time being, let's ignore columns F and G, because I'll come back to that with the scenario planning at the end. But effectively, what we would be doing on this tab is putting in all those orders that we've currently got that are on production or in the production line, but we haven't yet invoiced for, with the dates that we're expecting that money to come in. So now let's talk a bit about
confirm, just to jump in there. So just so it's really clear. So this is your forecast revenue going forward. So this is picking up everything that hasn't been invoiced yet, and it could be orders if you're an order taking business, or it could just simply be lines representing what you think is going to happen in future weeks in purchases from your business.
Exactly. So it's a really good point, John. So we could in fact have on the last 3 lines, or any point in this cash flow, you could have what am I expecting in what am I expecting in week 10, what am I expecting in week 11, what am I expecting in week 12, and I'm thinking, okay, £15,000 of revenue in week 11, £10,000 of revenue in week 12, and then £8,000 of revenue in week 12.
Right. So you don't. So that the point is, you don't have to have specifically calling out orders if you don't run like a pipeline of orders. You can just amalgamate it into weeks.
Exactly. Perfect. So let's then move on to age receivables. So this is the table where you have input information based on the invoices you've already issued to customers. Now, some of you are familiar with your accounting system, Xero, Sage, QuickBooks. There's an age receivables report in there. If you have any problems getting that information, please speak to your client managers and they'll provide that report for you. But effectively what we're saying is we've invoiced customer A £10,000. We're expecting that money to come in the 25th of March. And what we've done here is we've added it in a column called probability of payment. Now, given what's currently going on, it's a useful tool for us to assess, okay, how likely am I that these invoices are going to come in, firstly on this date, and secondly, for that amount of money. So as you can see here, in this particular example, I said, okay, these customers, I'm very sure they're going to pay, but then actually customers M to Q, I'm slightly less sure given their current circumstances and that construction might be slowing down. So I've reduced the probability that they're going to pay those invoices at that point. So that covers.
Avi, do you think you could point out what it does when you change the probability lower than 100%?
Of course. So let's take customer A. Currently, we're showing that we're expecting £10,000 in on the 25th of March. If we reduce that probability to 50%, as you can see here, the probability weighted amount changes from 10,000 to 5,000. The important thing is that this amount then feeds through to our cash summary table and then also to our chart at the front.
Great. So it's a good way of making sure your cash flow is conservative or conservatively bringing in the risk of not receiving an invoice.
Exactly, because I think normally in normal times, and these are anything but, one of the key things we tend to do with the cash flow forecast is underestimate revenue and overestimate cost. And given what the economy is currently going through, I think running through that exercise with pertaining to revenue and being really clear and even underestimating it is really important.
Great.
Perfect. So that covers the money in section of the cash flow. So now let's move on to the money out section, starting with variable costs. So as I mentioned earlier, variable costs in the case of the windows and doors manufacturer is the costs related to those orders that are currently in my production floor, or those confirmed orders. So I know for us that, given the way our working capital works, we tend to pay our suppliers around the same time that we receive the money in from our customers. So what, in this particular example, what I've done is taken an array of all the weeks that I've got my confirmed revenue in, and I've taken 40% of my confirmed revenue amount for that particular week. So in terms of functionality for this particular template, it's as simple as saying, taking equals, going to my confirmed revenue for that week one, highlighting that cell and timesing it by 40%. Now, as John pointed out very correctly on the age receivables tab, if as we change the probability and do the various scenario planning, this also will change and adapt. So we've got admin costs. As we said previously, these are your regular fixed costs. Now, one of the things that I find most helpful in terms of putting this together is actually looking at 2 to 3 months bank statements. And this is something I regularly do when I'm putting a cash flow forecast together for other clients. So I would look at what do we normally pay out as salaries, what do we normally pay out as insurances, rents, and so on. And what dates do we normally pay them out in based over the last 2 or 3 months. Now, the way we've put together this particular table, it's quite flexible. So you can input your salary amounts wherever you need, dependent upon when you need to pay it. So you can change it from this tab, from this cell, week beginning the 5th of April to the middle of April. And it allows you to organize your fixed costs based on what your bank statements are saying. Right, so then let's move to age payables. So as we said previously, age payables are those invoices that we've already received from suppliers. So in this particular example, for the windows and doors manufacturer, I've started here by saying, okay, well, actually, who are all the suppliers I owe money to? How much do I owe them? When did I receive the invoice? And then similarly to admin costs, I put in manually into each of these cells, when are they expecting payment? Because by putting it in this fashion, it gives us an idea, okay, what's everyone's expectations? Now, this is where one of our cash management tactics comes into play. So one of the things we would be doing during this period is saying, okay, well, for supplier A, given my relationship with that particular supplier, what terms do I think that they would agree to? So for example, for supplier A, they might agree to 25% of their overall invoice in this week. So we take 25% of that. And then they would take the rest at the end of April. So then we would put in the rest at the end of April. And it's as simple as that to adjust for that supplier. For supplier C, for example, they might say, look, as long as we get paid something every week, I don't mind if it even goes on for 4 to 6 weeks, because we don't know how long, for example, for the windows and doors manufacturer, we don't know how long things are going to take from a construction perspective. So we could literally say, okay, 12,000, take it weekly over 6 weeks, is 2,000 a week, and we would literally follow that through for 6 weeks, 3, 4, 5, and 6. We might even have some suppliers that say to us, look, we're going into hibernation, and we're happy for you to pay us half now, half later. So we've got this particular supplier here. We pay half at the end of May, and then the other half at the end of June. So we can make that particular change there. And so on and so forth. So this supplier might say, pay me over 3 weeks. So you say, or pay me over 5, so you put 2,000 in there, 2,000 in there. 2,000. So to reiterate, once you've, with this tab, get everything in there first, put the amounts of money in on the dates that the invoice is saying they need to be paid, and then we can start to do some scenario planning around, what do I really think this customer might take? I've been a loyal customer of theirs for a while. Will they let me pay over a few months' time? And we can start putting that together to understand what that does to our cash.
That's great. It's worth pointing out, as many of you who run businesses on this call will know, this is often, controlling your when you pay suppliers, doing deals with them, getting payments paid over periods of time. This is often one of the key areas where you'll spend your time to try and make your cash flow work.
Exactly. And this is something we can always refer back to every time we look at our graph to see, hold on, where can I squeeze out an extra 5,000? Where can I squeeze out an extra 7,500? So then the next tab is loan repayments. That's pretty straightforward. So this would be the page where any of the lenders that have given us money, we would put their names down, the amount we're repaying, and when we're repaying them. So one of the other tactics that we've got to hand at the moment is that by communicating with our lenders, with your lenders, you're able to negotiate some payment holidays. And some of the things that John and I have also done in the last few weeks is to negotiate payment holidays for 2 to 3 months. So in this particular example, we can take out at least 2 months worth of payments because the particular lender has said, you've got a holiday for 2 months.
I'm just going to come in there. I've just had a message come in and a question come in around from Marilyn. Do loan payments include credit cards? So yes, indeed, that loan payments do include credit cards. Now, I'd say from personal experience, credit card lenders will be the hardest lenders to negotiate with generally. But within the context of where we are at the moment, that probably will change. So whether they're a credit card lender, a bank lender with a term loan, or maybe an asset finance provider, everyone is open to being negotiated at the moment.
Perfect. And then the last tab of money out is, I'm sure everyone's favorite, VAT, PAYE, and CIS. Now, again, what we've done here and what I recommend we all do is input those amounts of money that we're expecting to pay and by when. And as we know at the moment, we've been given a VAT holiday, and also there is some flexibility around PAYE. So in this particular example, I'd be taking those out. But I may choose, for example, to leave CIS in, or I may not. But that's something we can choose to have some flexibility around, depending on what the cash is telling us.
Just to clarify a point there with the VAT, because it's a very important one. As many of you, the VAT payment each quarter is one of the larger payments in the week that you make it. Now, the VAT offer by the government is a deferral of VAT for payments due over April, May, and June. And the deferral is for 1 year. So it is not a holiday from not paying that VAT at all. It's just a deferral to it. So it is worth bearing in mind you will still need to make provisions later on, so in a year's time, to be able to make good on that. And you don't have to wait the year to pay it. You can pay it prior to that, or if you want to start clearing it down in installments, if that's better for your business as well. But it is no doubt that you should be taking advantage of it if you've got a VAT payment falling due in the next month or so.
Exactly. So what we've done is we've run through all the various tabs of where we're putting money in and money out. We've deployed some tactics around some of the payments we've got to make. So let's look back at our dashboard now to see what it's telling us. So as you might remember from earlier, our cash position went negative at the first week of April, and the largest extent to which it went negative was about 100,000, 100 to 105,000. But from the simple tactics we've deployed over the last few sections, actually we seem to have delayed going negative by half a week, and also we go negative to the extent of 57,000 rather than the 100. Now, that becomes really important because we can then start to say, okay, well, that's what we need to top up our working capital with through a possible loan or something else. So then what we would do is we'd slide over to this control panel, and in the additional funds raised section, we would put in to cover the full amount. In this particular example, I put in 60,000. We know that we'd need it ideally no later than the 5th of April. And in this particular example, I'm going to say it's 3% interest and it's on a 36-month term. So as you can see, once you put that amount of money back in, actually the cash graph changes, and we only go negative to the amount of 2,646. Now, as some of you have probably experienced through running your business, that becomes a lot more of a manageable number. But also, if that number isn't manageable, then we would say, okay, hold on, I probably need to raise a bit more than 60,000. I might need to raise about 65,000 or 70,000 to be safe. But it starts to give us a clear indication of how much we need to raise and why. And how much we need to raise and why we need to raise it is going to be a key question we're going to need to answer as you go to raise this funding.
I just want to jump in there just to re-emphasize this point of just what's just happened here, because what we've just done here is just emphasizing the need to have a tool like this to make decisions about what you borrow and when you borrow before you approach a bank. So prior to all the sequence of things that Ravi went through. So remember, he removed some VAT payments, he pushed out some PAY payments. We took a capital holiday on a funding circle loan in there. We played around with some of our suppliers, did some deals with them, moved some payments out, and we moved the amount the business needed from over 100 grand to, I think Ravi, you just put in £70,000 there. Now that's a really important point there, because the environment of lending we're in now is that the banks are open for business, and the government's providing these guarantees to ensure that banks are getting money out. But banks are still only writing commercial loans and loans that businesses can support. Yeah. Okay, so trying to find ways to reduce the lending that you're going to need, and to bring it to levels that the business can actually manage, is going to be really important. So being able to capture the impact of all these little tactics to figure out how much I need to actually go to the bank for is crucial prior to talking to any lender.
Perfect. And the graph in itself would be useful to provide to them, as we've been finding out as we work through various application forms. So the last thing I'd like us to touch on is we've provided some various scenarios. Now, as you can see here, the various scenarios include absolutely no change in sales, a 10% uplift, a 10% downlift, a 10% reduction, a 25% uplift, and a 25% reduction in sales. Now, this affects our confirmed revenue and also our variable costs. Now, and as John and many other clients know, I'm very adamant in the cash flow that I want to underestimate revenue and overestimate costs, so I know exactly how much I need to go and ascertain, how much funding I need to go get, so we have as much headroom as possible. Which is why in this particular example I've taken scenario 5, but we could change that to scenario 1, and the chart changes accordingly. Now, the key thing, the other scenario planning that I want us to have a look at, is back on this cash summary tab. Now, what we've done is we've put some switches on these lines to allow us to start saying, okay, well, how about if we, in the case of the windows and doors manufacturer, how about for the next 12 weeks, we don't try and fulfill on any orders that we've currently got on the factory floor. We just focus on getting in the money that we've already invoiced for. So in this particular example, I would turn off confirmed revenue. I would also turn off variable costs, because those are the costs associated with delivering that confirmed revenue. We can then look back at our dashboard and we can see, hold on a second, if I was to do that, okay, it's not as bad as I think, but actually I probably need to raise more like 80,000 rather than 70,000. But it gives me a very clear picture to say, okay, well, actually, I could potentially not try and fulfill on any orders, but just focus on bringing in that revenue that I've already invoiced for. So just to reiterate, when you're starting out with your template, get every single pound and penny of cost in here, every single pound and penny of revenue. Put it in exactly when you're expecting to receive it, exactly when you're expecting to pay it. Once you've got it all in there, then have a look at your dashboard, see what the cash flow is telling you. Then start to do some scenario planning, both around your confirmed revenue and your incoming invoices, and some scenario planning around your costs. Then reflect back on the cash balance to then see how much money that you might need to go raise through a loan.
Great. And it's really a good point to emphasize here is that it's taking this conservative view to what you think, which is why the sort of, if you scroll left, the scenario planning tool in the inputs is really key, because what this is doing is just hedging down, so it's reducing down the forecasted revenue that wasn't invoiced into your model, so that you can make sure that when you're making your assumption about what you need to go from the bank, you're getting, one, the amount that you need that the business can support, but two, more than enough to cover even a worse scenario than your data currently suggests. It's also just worth emphasizing this point about getting data in. Now, just the process of capturing everything, capturing all the invoices that you've got to pay, all the invoices that due in, and getting it into one place. That process in itself is quite stress relieving, in that you can then turn to one place to go, right, at least all my information is here. It's a place where I can make sound and rational decisions, rather than, for example, reacting to the supplier who's shouting the most, or indeed just chasing after the customer that you can most easily get the money from, rather than focusing on where the biggest win is, or the right customer to pursue.
And that's a really good point. And I think one of the things that we've often used the cash flow forecast for is, when suppliers are shouting, we would turn around to them and say, we're just updating a cash flow forecast, we'll be back to you with what we can do. Now, interestingly, that's every business tends to do the same thing, so that tends to keep them quiet and buy us some time to really understand our cash position. And John and I have experienced this over many years, that cash can be the number one thing that keeps business owners up at night. So having everything in one place that you can refer to, even if it is at 2 a.m. on a Sunday, on Monday morning, you can then refer to it in one place, and you've got a plan for what you're going to do for the next 13 weeks.
That's exactly it. Okay. All right. Well, thank you very much for that, Ravi. Now, if anyone's got any specific questions about using the template, we'll make sure we distribute some contact details for you to contact us directly as well. But please post those questions in here before we finish the call today, because we can pick them up, and if we can share them with everyone, hopefully that's useful for everyone. Okay, so we've got a number of questions being posted about sort of more general features, and as expected, questions around what are the government doing, and particularly around wage support and things like that. So let's move on to just talking about those, and then what we'll try and link that into how you use those and plan from a cash perspective. So question coming in from one of our clients, Neil, who actually is part of a Windows business, so this is very relevant to you. Good example you've used today, Ravi, around the massive scheme the government announced around covering 80% of wages for furloughed workers. The questions tend to be, when do we think we're actually going to see the money and be able to access it? And there's questions around, actually who is involved and not involved in it. Now, the first thing to say is there's the amount of information that is out there at the moment is rather limited. As you would expect, the government wanted to make sure we knew that this was coming, and then in the background, I'm sure there's lots of people staying up and lots of sleepless nights trying to get the actual policy working. But what we know at the moment is that the scheme is available for this type of worker called a furloughed worker, and the definition at the moment extends to those that have been told to be temporarily absent from work. So our reading of that is that if you have staff then who you've reduced their hours or you've reduced their pay, but they continue to work, this will not cover them. Is for those workers, because let's say you've closed a factory or you've closed a cafe or pub setting, then it's those workers who've then told to be at home and can't come to work that it will cover. Now, there's just really some other questions coming in. There's a question coming in from Steve here, talking about, is PAY suspended for payment, or is this to be announced later? Now, at the moment, there's no announcement that there's no official line that PAY payments have actually been suspended. But what we know, and part of the government measures that have been put in the papers that the government releasing, is that you can do a deal with HMRC pretty much on anything at the moment. But in some of those of you who were on our call last week, you'll note that when you're approaching HMRC, you must always consider several things. One, that you're not missing filing your PAYE filing or VAT filing, that you're contacting HMRC very quickly to talk about these things, and you're presenting a case of how this is, you're going to try and make this not happen again, that your businesses can continue to trade. So presenting, showing how we can get through coronavirus issues if we can't pay this, and also being able to pay something up front helps to get a longer term altogether. Now, as we're starting to make deals for clients at the moment with HMRC, we're seeing HMRC be very lenient on these. So please do consider any VAT, PAYE, etc. payment as something that you could cash flow. Now, just going back to the question on the furloughed workers, in terms of timing when this money is going to be available, we wait with bated breath for the announcements this evening, but as yet we don't know when the portal's going to open or working cash is available, unless something's changed in the last half an hour while we've been on here. But what we do know is that payments will be backdated to the 1st of March. Okay.
Yep.
All right, so let's just scroll down for a few more questions here. So we've got some questions around grants. So are there any grants that we can apply for outside of the criteria with rateable value? So this is so the grants that are out there, there's 2 grants of 10, well, it seems that there's either 2 or 3 grants depending on how you read the information being out there. There's grants for 10k and there's grants for 25k. Now there's a 10k grant that says that if you get receive small business rates relief regardless of what industry, and you can go and apply for and receive that 10k grant. And then there's a set of grants, another 10k and 25k grant that are based upon rateable value. And so if you work in the retail, leisure, cafe, pub sector, depending on your rateable value, so between, I think it's 15 and 51 for the 25 and below 15 for the 10, you can receive this grant. Now, first of all, you don't have to apply for these grants. The message at the moment is black and white, it's clear. You will receive them from your local council. You don't have to do anything. At the beginning of the week, I was saying contact your local council to find more information. I would suggest at the moment that you just hold out doing that, because what we're hearing from the councils is that they're just overwhelmed with calls without a proper answer to this yet. But you will receive it automatically if you're due. Now, are there any grants available outside of this? At the moment, there's none that the government have announced, and this is really where, if you're above that rateable value and needing money, you should be looking at the loan scheme. So the loan scheme, remember, covered it's a guarantee that the government is providing to banks. So 80% of the loans being guaranteed by the government to encourage banks to loan to get more loans out to businesses. And the loans are going to be term loans, overdrafts, invoice finance, and asset finance. So it's not just a term loan product. And the loans are being distributed. So the where you go and get the loans are going to be from your high street banks and a series of other specialist lenders. We can, I think in one of the notes that we circulated to a lot of the guys on the call here previously, we've listed out all of those banks that are available out there. Well, it's clear you still have to make a commercial application for these loans. Producing all these cash flows is really key for it. And actually, we had some intelligence through this morning from NatWest. So NatWest have produced a document actually laying out what you've got to do to apply to us for loans. And it's very clear that this is not free money, that you've got to put together a very credible commercial paper for it, which includes forecasts, I think, covering all the way to 2021, including P&L, balance sheet, and cash flow forecasts. So please do your homework to get ready for approaching your bank before just jumping in there. Okay.
Just on that point, John.
Lots of questions coming in. Shall I feed some of them through to you?
Yeah, that'd be good. Let's just let Ravi comment on this one here, as Ravi's had some experience recently on applying for some of these loans.
So what we have noticed happening over the last few days, and even in the case of NatWest, is that they've been changing the amount of information they've been asking for. So actually taking the published document is quite useful, because that provides a fuller pack as to what might be expected from your incumbent lender. Now, one of the things John touched on earlier on in some of these calls, and maybe last week, was starting with your current lender is a good place to be. Now, if you haven't had any communication from your current lender as to what they're asking for, taking something from the NatWest document or from another lender gives you a good starting place. Because as what we're finding is that, for example, Lloyd's have only recently released their application form, and it's similar in nature to what NatWest are asking for. So it's a good starting place. And as John's showing on the screen, this is something we've covered in the preparing for lending checklist.
Yeah, so we'll make sure we keep recirculating this. So it's just a document to help you start ticking off the things that you're going to have to get ready. And yeah, from what we're seeing out there, this seems pretty close to what a lot of banks are asking for out there.
What we are finding is that going to the bank with only 3/4 of the information causes us to get sent back. So you really take the time to get all the information together first and then get it over to your lender. It's going to, whilst it might feel a bit slower at the start, it's going to be more effective as you go through the process.
I'm just going to share on screen the list of banks as well, because I've had a question here going, what banks can I approach? So I've got a list that I can bring up. So this is another document that we've put together covering all the various different government schemes that are out there and trying to get some of the quick FAQs on there. Now, the list, if we can all see it, try and zoom in a little bit. I'm not sure if this list has changed. I don't think it has from when we first issued it, but if you scan through it on screen, you'll see it includes pretty much all of the high street banks. Now, there's one bank that keeps coming up that we're asking about who's not on this list, which is the Co-op Bank. So the Co-op Bank are not distributing at the moment these loans, but it includes the HSBCs, NatWest, Barclays, Lloyds, etc., and also some of these specialist finances like Aldermore. You know, Hitachi, we do a lot of work with for asset finance, invoice finance type stuff. Okay.
There are new lenders applying to be part of the government scheme at the moment, so that will likely change if they get approved.
Rosie, do you want to feed through some more questions?
Absolutely. So we've got a question about the furlough workers, saying if you reduce the hours of a staff member, can you then make them a furlough worker? And how does it work in terms of part-time employees as well and furlough?
So I mean, first of all, it's worth just re-emphasising that reducing the hours of workers and reducing pay are really good tactics for you as business owners to use to avoid having to make redundancies or to avoid having to go down the furlough route, because you know, if it's for most businesses, unless you're actually you're retail and high street, it's often better to be open and still getting some income in than to actually cut people off and stop working. Now, if someone is on reduced hours, or a lower pay, they can't be that and furloughed at the same time. But if you've reduced the hours and now you think, well, actually, I just need to move to complete hibernation mode in my business, or I need to shut down that particular factory, you need to make that worker from reduced hours to now declaring them as absent from work. Okay, so they can't work to be furloughed. Now, we don't know how that's going to be checked or the exact legal terminology that HMRC or the government are going to rely upon in doing that, but that's the message that we've got at the moment.
And John, one more on the furlough workers. Cindy Wan has sent in a message. Mm-hmm. Can an employee take another job whilst they're being a furloughed worker?
It's an interesting point. Now, this is just within the normal context of, so without this scheme, the government guarantee wage scheming attached to it, if your employment contract with an employee allows them to have other employment other than with yours during their relationship with you, then from a legal perspective, technically there wouldn't be a problem with them doing that. Now, when it comes to looking at the close legislation related to the rolling out of this scheme, it may well include legislation that says the individual cannot be taking any other work elsewhere during that. I would expect that to be in it, but I can't be sure. Actually, I've got a feed coming in from one of our tax team at the moment saying no, they can't take another job, so it might already be confirmed by them. So let's stick by that line at the moment, that if they are furloughed, the answer is probably no, they can't take another job.
Okay, and we had a question here from Gary Barlow. I think we've answered this, about where do you apply for these guaranteed loans?
So I've popped up some of the earlier the list of them, but it includes the likes of Barclays, Bank of Scotland, HSBC, NatWest, Santander. Pick a few more big ones. Royal Bank of Scotland, TSB, not the Co-op Bank. The Metro Bank are on there. So a lot of those main banks out there. Now, if you look on the email that we distributed, I think with the link to this webinar, there were 2 documents on there, and one of them was the coronavirus guide to SMEs. And on that, I've got that list on there, but we'll be sure to recirculate that list later as well.
Okay, and we've got a question from Stevie O'Driscoll, who's saying he applied for a loan of less than 25,000, and they said no, they wouldn't give a loan for a lower amount.
Sorry, can you repeat that again?
So Stevie O'Driscoll said he applied for a loan of less than 25,000, and the bank said that they're only giving loans over that amount.
Okay, so Ravi, actually, we saw something like this on the NatWest information coming through around limits on loan. Do you recall what we had on that?
So the way that the banks are structuring these loans, in effect, is if you require below a certain amount of money, some of the banks are going to channel you through their normal commercial terms. Now, if as you go through that term, now if you imagine it as separate channels, depending on the size of the loan, they'll push you through various channels. Now, what we're understanding is that, and this is obviously being updated each day, what we're understanding is that as part of that channel of that loan, if you're not able to provide the normal amount of security, then that's when they might look to introduce the business interruption loan scheme as a guarantee backdrop to it. Now, but what we are seeing is that whilst some of the lenders saying, okay, to be this coronavirus business interruption loan scheme ranges from 25,000 upwards to a certain level, then but not below that, they are still providing options to get funding for less than 25,000.
Actually, I just had a message come in from my team here as well that the NatWest literature at the moment is saying they'll do loans from £5,000 onwards. So I suggest if your current bank's not giving you 25, go and talk to NatWest.
Okay. And we've got a question from Steve Gibbs. How can Acuity assist with these cash flows and applications?
Thanks for triggering that, Steve. So both Ravi and I spend a lot of time with clients outside of distress situations as well, working with them to raise money, to approach banks, and to build cash flows and the like. And often the cash flow tools and things we build are similar to what we've shared with you today. So please just reach out to your normal partners or client managers if you think you're going to need help building any forecasting, management accounts or anything in terms of approaching a bank, or indeed if you are struggling to get across the line with your bank, then you could talk to us as we've got lots of relationships with various different banks and specialist lenders as well. Particularly if you're applying for the large end of the loan, so if you're on the call and you're looking for 250 grand upwards, those loans are going to be structured in slightly different ways, and the banks are going to be looking for more security on those. So we can help out with those as well. Now, I just want to pick up this. There's a message coming in from Paul Etty. Hello, Paul. Around saying the banks are under fire as they're requesting businesses to secure the loans with personal guarantees. Now, this is absolutely true. So the media picking up on this. Now, technically, the way the government guarantee is working is the government guarantee sits behind any personal guarantee that the bank requires that you make. So the banks are writing these loans in a normal commercial way. And often if a bank provides an unsecured loan, then they require a direct or personal guarantee to cover at least some or sometimes all of that loan. And the government guarantee is actually going to sit behind your personal guarantee. So if the loan becomes delinquent and you can't repay it, the bank will be seeking or enforcing your personal guarantee, any security, before the government step in. Okay, so that's helpful, Paul.
Okay, John, we are out of time now. Should we wrap that up?
Sure. Let's wrap that up now. We'll probably run this session again, looking at the tool, as I know we'll end up with lots of more questions in as people start to try and use it. And it goes without saying as well, we're going to continue to run webinars with updates on things like the wage guarantee scheme, the loan guarantee scheme, as we learn more. And this evening we're expecting to have a significant update on what the government's going to do with self-employed workers. It's a very hot topic right now. So we'll get something out for that. Okay.
Great. Thanks very much, John. Ravi, let's finish there.